Roughly 6 out of every $10 held by the world's central banks aren't American savings. They're the world's trust in America, stored as paper. Tonight, in this scenario, that trust is gone. By sunrise, the price of everything you own starts to change. This is the first year after the dollar loses its crown, hour by hour. It begins with a press conference on the other side of the world. A block of major economies, oil producers, manufacturing giants, announces that from this day forward, their trade settles in a basket of currencies, not the dollar. Now, to understand why this matters, you need to know what a reserve currency actually is. When a country sells oil, or buys semiconductors, or stores its national savings, it mostly does it in dollars, even when no American is involved. That constant planetary demand is a quiet subsidy the United States has enjoyed for 80 years. Economists call it exorbitant privilege. It lets America borrow cheaper, import cheaper, and print the money everyone else needs. In this scenario, that demand doesn't shrink. It reverses. Central banks that hold trillions in dollar assets are now sellers. And when everyone sells at once, there's only one direction prices can go. By morning, the dollar has fallen further in one night than in any week in modern history. Day 1. You haven't checked the news yet, but your wallet has. A weaker dollar means every imported product costs more. Instantly. Gasoline moves first, because oil now trades in someone else's currency. Then electronics, coffee, clothing. Your phone was assembled across 3 continents. Every leg of that journey just got more expensive in dollars. Here's the uncomfortable math. America imports over $3 trillion of goods a year. If the dollar drops 25%, that's not an abstract chart on financial news. That's a fourth more expensive. At the port, then the warehouse, then your receipt. For decades, a strong dollar quietly made Americans richer than their paychecks suggested. In this scenario, that subsidy runs backward. Nothing in your house changed. Everything under your roof is repricing anyway. Week 1. The real damage arrives, and it comes through a door most people never think about: the bond market. The U.S. government borrows by selling treasury bonds, and for generations, the world lined up to buy them, because they were the safest asset denominated in the world's currency. Take away the world's currency part, and foreign buyers now want compensation for the risk. Higher yields, much higher. And here's the chain reaction. Nearly every interest rate in American life is priced off those treasury yields. Mortgages, car loans, credit cards, student loans. When treasuries jump, everything jumps. The 30-year mortgage that cost 6% last month is quoted at 10, 11, 12. Home sales freeze. Sellers can't cut prices fast enough to offset the payments. Businesses shelve expansion plans. The government, now paying double interest on 30+ trillion of debt, faces a brutal choice: cut spending, raise taxes, or print. And printing is what caused the panic. 1 week in, no bombs have fallen, no banks have closed. And yet the cost of time itself, of borrowing against the future, has doubled. Month 6. And here's the part of this scenario almost nobody talks about. Some people are winning. Exporters first. A cheap dollar makes American goods a bargain abroad. Factories that couldn't compete with overseas pricing for 40 years suddenly can. Farm exports surge. Foreign tourists flood American cities, spending currencies that now stretch further. Commodity countries win too. Oil, metals, and grain priced in other currencies buy more than they used to. And savers who held hard assets, gold, real estate, foreign stocks, watch their wealth survive the repricing. The losers are concentrated. Anyone holding dollar savings, anyone living on fixed dollar income, and anyone who borrowed short-term and has to refinance into the new rates. This is the pattern of every currency shock in history. It doesn't destroy wealth evenly. It transfers it. From those who trusted the old money to those positioned for the new one. 1 year in, a new equilibrium forms. Trade continues in a messier, multi-currency world. America is still rich, still powerful, but it now lives like every other country. It has to earn the world's trust at full price. And here's the twist this whole simulation has been building to. The overnight version you just watched? History says it doesn't happen that way. The British pound was the world's reserve currency before the dollar. And it didn't lose that status in a night. It bled out over 4 decades, war by war, crisis by crisis, while almost nobody noticed in real time. Now look at the real numbers. At the turn of the century, the dollar was about 70% of global reserves. Today, it's under 60. Central banks are already diversifying. Slowly, quietly, year after year. The question was never really what if the dollar lost its crown tomorrow. It's that the slow version of this video may have already started. If you want to see what happens when the machine breaks in the other direction, when the markets themselves simply close, watch this next. Because in 1914, that actually happened.